Hi, folks. Rick Wedell here. I'm the Chief Investment Officer at RFG Advisory in Birmingham. Thought we'd come to you with a brief market update, kind of let you know what's going on out there. S&P 500 is at 4440. I feel like I've said S&P 500 is at 44 something for a lot this year. We've kind of been range bound. We're down, call it 6.5%, 7% for the year in total. Not terrible, not even in correction territory, but certainly a little range bound over the past couple of weeks. Two competing forces that are out in the marketplace. The first is earnings. We are very, very early into earnings season, but companies are starting to come out and tell us how they did for the first quarter and, more importantly, what they expect for the rest of the year. So far, those numbers have come in pretty well, above expectations in general. However, I would just note that it is very, very early days. And so we'll see how this sort of plays out over the next couple of weeks. In the meantime, investors' eyes are obviously very focused on that because nothing moves stock prices more than earnings. The second thing that is out there is obviously inflation, which we've been talking about for a while. Last week, we had an inflation report that came out, pegged inflation at 8.5%. That's obviously incredibly high. When we talk about inflation, we talk about two different things. We talk about the total inflation number, which is that CPI number includes the entire basket of consumer goods. But then we also frequently talk about core inflation. And core inflation is the basket of consumer goods, excluding energy and food prices. And the reason why economists sometimes like to focus on core inflation is that energy and food prices tend to be very volatile year over year, volatile in the way that housing and some of the other goods that make up the consumer goods basket are not. And so core is generally looked at as maybe a little bit more reliable indicator of what is actually going on with inflation in the economy, or at least the inflation that the Fed's trying to control. With the war in Ukraine, which started a few short months ago, we have certainly, or about a month ago, actually, we have seen spikes in energy and food prices because those are the primary exports of Russia and the Ukraine. Core inflation, on the other hand, appears to be moderating somewhat. So there were a number of headlines late last week around the fact that the core inflation rate slowed to about 0.3% month over month. That was actually a little bit below expectations. And we'll continue to sort of monitor and watch that on a go-forward basis to see whether or not those pricing levels have actually peaked. We've talked about before, but I will just remind everybody again, inflation is a year-over-year measure. And if you think about where we were in March of last year, most of it seems like eons ago, most of us were still locked in our homes. So it's not surprising that we will see some moderation in that inflation number on a go-forward basis. Energy and food, obviously, those price spikes have been far more recent. So we'll be dealing with those in the annual number for much longer. But the core number should start to creep down through the rest of this year, particularly with the Fed working on it. So with that, as always, if you have any questions, please feel free to reach out to myself or to your advisor. I hope you're having a great week, and I look forward to talking to you again soon.
Thank you for tuning in. And if you're enjoying this content, please subscribe to our YouTube channel and click the bell to be notified when we post more.